This ticker appears to be in a very precarious position and could be signaling a downside from its current position. The problem here is that there could be some hidden details that may be setting price up for a monumental bear trap. Welcome back to the channel on this happy Friday. This is ARCa, and let's dive into ticker symbol EOSE. Let's kill 'em, team. What is up, you guys? Thank you so much for stopping by once again. Let's dive in to ticker symbol EOSE, and we're going to be observing this on the bi-daily time frame. So if you are not aware of this formation that you are currently looking at here, this is the ascending broadening wedge, and this is typically a very bearish formation that would lead price action down to the target of where the formation initially started, so to the genesis of the formation. So in this case, the genesis being at 95.50, and the asset is currently sitting at $2.27. So you can just see the risk in this position here. That would be minus 58.5% move to the downside if it does realize in the fashion of which is presenting itself currently or presently. So, but there are some really, really tiny hidden details within this price action. And I feel like it is worth going over, and it is worth observing, because this could be a pretty good, I guess, a pretty good kind of lesson here, right, for all of us, including myself and everyone, right? So this is a real, I guess, it takes real wit here to kind of see what could be at play here. Okay, so if you are not familiar with my channel, if you're not familiar with what I do and how I trade, I do have a heavy discretionary side, but I primarily focus on systematic trading or quantitative analysis and things of that nature. More of the automation behind a trade. So let's dive in. The golden rule of three is usually something that I tend to respect when it comes to formation theory or formation analysis, right? So that requires 3 tests of the resistance level before a capitulation event, and then in essentially realizing the true nature of the formation itself, right? So this is entirely psychologically backed. It doesn't have any mathematical properties to it whatsoever. So we must kind of put ourselves behind the seat of a psychologist or a mass psychologist, right, to understand what could be happening behind the price. Okay, so let's start counting our iterations here. So in this particular case, the way that it's drawn right now, we're looking at test number 1, test number 2, and you are not catching any, I mean, there is a potential test, right? Let's see. I would say this would be test number 3, right? And there's nothing here unless this was the fake out, but it feels like it's test number 3, unless this was the fake out and this was the, in fact, you know, the test number 3. And then this created a massive bull trap. And the reason why they would consider it a bull trap is because, as you can see here, it came very shy of touching that top trend line, right? You can see here that there's quite the space still away from touching that top resistance, which would, in essence, signal a bull trap here, and then price action would fail, bounce to a relevant area of resistance, and then essentially succeed the bottom side of the support line, the support regression down here. So what happens there is that as soon as you get this perfect little bounce here, you get another little resistance touch, then you fail it, or in the bear's case, you succeed the trend line, and then you come back up and validate it as a form of resistance. As soon as you get that resistance confirmation, then you get short the asset, and then you start, you start making your trek downwards. So it's going to be kind of a zigzag. Right. So, but what I want to signal here are some very, very key nuances, specifically within this area here. So let me go ahead and zoom in and show you something. So as you can see here, there is still space to have the trend line or the regression fall just a little bit lower to favor the actual contact between those candles and the regression. Now, what happens there is that when you do adjust that to touch these two candles, you automatically get to touch this top side. And I'll explain to you why that's very important. Okay, so now we'll touch that top side like this. Now we have the contact from this one, and this one here. Okay, so now what that does to the golden rule of 3 is that it invalidates a bear thesis. Now remember, this is just entirely discretionary. There's no backtest to this, and I am observing this based on tiny nuances, right? So now we have test number, so we now have test number 1, 2, test number 3, and after test number 3, that would be the signal to, succeed the downside. But then when you faked out and you continued on to the upside, you created between these two tests a single test together. So that would be test number 4, immediately invalidating the bear thesis. So now as you get that supposed test number 3, huge capitulation, there was bear trap number 1, right? You break back inside of the channel or the wedge, then you come back, support right at this trend line here, and then you continue onwards. Now this is test number 5, right, where some bears may have thought that this could have been that test number 3, so they take it all the way to the downside right here. You get that touch down here and another bear trap. So this thing recovers the inside of the wedge, tests the support bottom, and then resists at whatever resistance. It looks like it was this tweezer top right over here that you resisted from. And then you succeed the bottom side, and now you're giving the implication or the idea that this is in fact a short play. So the upside here would be over maybe 1 day or 2 days where price action can lead anywhere between 227, let's see. Yeah, I would say about, 257. Let's just go ahead and kind of draw it in there, right? So that's at 256. It's okay. So maybe the top side of around 276 from 227, right? So this could be an increase from this current position anywhere between 12.5% to around 21.56%. Massive upside. This is a buy daily formation. But what happens here is that you wouldn't actually resist from this level. You may actually see the entire wedge get reclaimed, and then we would use this area here as a support bottom before continuing on to the upside, thus creating a massive bear trap down here. Because right now they're thinking that this is going to get, they're going to get short here and just take this thing down for a freaking 56-60% ripper to the downside. But there are a few things neglecting or denying that. First of all, we have increasing volume here. You can see a clear regression of increasing volume with ascending price. That is usually a bullish signal and a signal suggesting that the bulls are still in control and price action is set to make some higher highs. Okay, so now the other thing that bears are thinking is that they have a potential buy formation or bearish buy formation breakdown. Okay, so this would be their shoulder, right? Then they have their head, and then they have the right hand shoulder. This is a head and shoulders formation. This would be indicating a bearish formation, and it does show the downside. Now, let's go ahead and take that measurement because this is something that the bears may be looking at as a slam dunk. So the regression line, this is the neckline here. Okay, you take a trend line from that top side to the very bottom, then you apply it to the right hand shoulder right over here, and it's taking you to a target that's very similar to the target that the bearish formation, the initial bearish formation, is suggesting, isn't it? Right? So in this case, you can see that target is leading to a price of about 81.21. So historically speaking, I don't see anything back there. But, I mean, there very well could be if we zoom out. Let's see. Yeah, no, nothing. That would be price discovery. So, in other words, we now have a support range here for the bears, right? So we would kind of jot this down here. And now this looks like a buy formation breakdown play that would essentially lead to a slam dunk target down there. Very confluent together. right? But like I said, increasing volume here, ascending price, that's definitely not suggesting bear territory. Next reason, Gaussian channel. Check this out. I have a particular focus here on the bi-daily time frame and the monthly time frame, right? So the bi-daily time frame, check this out. We came back down and now we have validated the support bottom of the Gaussian bands. So this usually suggests a V-shaped reversal, right? So this is another reason why I'm thinking like that this could be a pretty big bear trap, that this is already that support bottom and we're already moving towards the upside. The low of today's candle, or the low of this bi-daily candle, was $2 flat, eventually reaching around $2.36. Okay, so now in observing the shorter time frame, you're going to go ahead and notice that there's upside pivots everywhere because of this massive pump. But let's go to the monthly time frame so that I can show you one more thing. Here on the monthly time frame, this is also suggesting that we have just recently touched the very bottom side of this Gaussian band, and now we're rejecting from that bottom side. And this is very particular because you can see back here when the formation started, December 2022, that we started to reclaim and started to knock at the door of the bottom side of the Gaussian band. So we made it inside of it, right? We broke down below it, and then we closed upside of it, and we're still, we broke inside of it again, and now we're validating that support, validating the support, validating the support. So that could be a full-on recovery here. That means that we face the bottom side, and inside of the monthly Gaussian bands, we could be looking at a macro support here before continuing on to the upside. Okay, so we still have 6 days and 18 hours to close this. I do have to say that as long as this candle remains below this candle here, which is the opening from the prior monthly candle, you can see the values right up here, right? So that's going to be your opening of 241, and we're currently at 227. So as long as this price action stays below 241, you are in absolute danger, which is also giving the bears the strength towards a downside move. So there are very small little nuances that are suggesting otherwise. Okay, so this is a bearish engulfing. You're looking at, presently, but we still have an eternity of time to close this out, which gives enough time for the bulls to reclaim the inside of the wedge and then move onwards and upwards. Okay, but if it doesn't happen, then you would likely be seeing here a bearish engulfing, and your bottom side targets would be succeeded. Okay, so let's go ahead and just observe real fast the immediate short-term time frame. So 30-minute volatility versus momentum. Let me go ahead and just kind of lift this up a little bit so we can see what's going on, right? Okay, there we go. So 30-minute immediate short-term time frame is very close to the gravitational zone of the bullish control zone, right? So right up here, this could be a gravitational area, right? So we're still very close to it. We're not quite there, but we definitely need to get it. Now, the 30-minute RSI is suggesting a potential small pullback. But if you get that pullback because you're in this gravitation of the bull strength percentile, you would get pulled down, sure, but then you would only find support from the SMA 14 represented by the pink line and the gravitational zone of the bull weakness percentile. So a bounce to the upside could be seen there. Hourly time frame, upside pivot on stochastics, expanding volatility, just like we're seeing this upside in the here in price action, right? So it's looking pretty good. Okay, not only that, it's just that I am also seeing here the potential of a shorter time frame bullish formation here. Actually, this is pretty nice too. Now that I'm noticing it, this is actually building. Yeah, we're actually building an ascending triangle here. Okay, yeah, that's looking pretty good. Usually these triangles tend to break up or break out at about 65 to 70% to the apex of the triangle. So in other words, Monday. So let's go ahead and see here what that target can be. First, the short-term target. Since we're saying here that it could be Monday, take a trend line from the top side of the triangle to the bottom side, apply it to the top side of the triangle, and you're already given a target of about $2.52 or inside of the wedge. Now, the second target would be, there's three targets for this, right? Three bulls trading this. So this is the center of the triangle itself. Take a trend line from the top side to the very bottom side and apply it to your top side here. And that is taking you right into the target that we spoke of, this one here. So that is taking you to the resistance of about 256 with a focus on around 260. And now the last target here, which would be the top side of the triangle, right up here. You take a trend line from that top side all the way to the bottom side, and then you would get presented the largest target that this formation can provide. So let's just apply it right over here, just like always, right? And then take a look at this. How confluent is that to our discretionary resistance level? Right at 278, and we were already drawing 276. So you can see that both the medium target and the larger target are 100% in sync with our discretionary resistance coming on up. Okay, very good, very, 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 very good. I'm looking at this as a high probability here, as a potential continuation to the upside. Hourly time frame RSI, by the way, is located in the gravitational zone of the bull weakness percentile, meaning that we would get pushed to the upside here into bull strength. Okay, let's go to the 3-hour time frame. Please take a look at the 3-hour time frame with a very convincing upside pivot. Same situation here with the RSI and MACD. Also, take a look at this. This is your stochastic momentum versus money flow index. The histogram in the background already showing blue bars. That means that cash flow is pouring into the asset as we speak. Somebody knows something here. Okay, and I mean, not even to mention this, that this is a small 3-hour time frame descending broadening wedge, and that the take profit for this formation here is the genesis of the formation. And where's the genesis of the formation? Guess where? 277. Yet again, meeting that same target from our discretionary resistance and the hourly time frame ascending triangle. Very, very interesting times here. All right, so 4-hour time frame, stochastic momentum upside pivot. We have some contraction happening, so less trades getting traded during this time. But the RSI is actually still pivoted towards the upside, and it's approaching the gravitational zone of the bear weakness percentile. Not to mention here, bullish crossover from the MACD and increasing bull pressure too. All right, so now let's go to the 8-hour time frame. 8-hour time frame, upside pivot. We have increasing volatility as well. Take a look at this bullish crossover. Now, the RSI signal has cleared the gravitational zone, so it's not quite in danger yet, right, to that downside. And please notice the massive amount of loss of bear pressure here. We're about to create a bullish crossover too. 8-hour time frame. Let's look at the 12-hour. 12-hour upside pivot, right? Take a look at this. Bullish crossover here. We could and the first green bar starting to print on the 12-hour time frame. Now, we could get a little bit of a pullback here because we are in the gravitational zone of the bear weakness percentile, but that's good news for the bulls because you just get a little bit of a pullback here, validate your SMA 14 support and the gravitational zone, bounce to the upside, and you have your 12-hour stochastic momentum versus money flow with cash inflow. Upside pivot on that histogram, right? I really do think that this is potentially setting up a massive bear trap, and there could be an opportunity here. So thank you so much, buddy. I'm going to go ahead and take a look at your name here on X and find out who that was, right? So that was aggravation VH, right? So that's at VH _aggravation with AGGRA. Right. So thank you so much for asking about this ticker. It was a very fun one to analyze and very interesting to kind of play the challenge here. Right. So please remember that I may be wrong. Right. I may be entirely wrong here, and this price action can lead to the downside here. But my thesis is actually based around the bulls. And I do think that there is a very unique opportunity here. Present, right? So now you know the plan, and now you know the play. You know what I'm thinking. So just go ahead and you do your research, and everything will be cool, right, team? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. I wish you a very good weekend, and I will catch you at the bell on Monday. Adios.